Hello guys, how are you today? On today's video we are gonna cover another of the most common topics or the most frequent topics you ask me for, and basically it's the market screener. Okay, as you know, the other day we covered lifetime execution, real-time data gathering, filtering, processing, implement our technical indicators, and execute orders based on certain strategies. Today what we're gonna do is the step before. Basically, what we will need to do in order to implement certain strategies to know how's the market and which assets we want to go for in order to develop certain strategies, okay? So, probably all of you have used stock screeners. There are a lot of places that they provide stock screening, and then you can customize in one way or the other, okay? But sometimes what you want is your personal one, which focus on the way you face the market, probably mixing fundamental data with technical data and price action, etc., etc. Okay, so what we are gonna do today is the first step of that. We are gonna define our framework to develop our stock screener. Okay, in a customized way. We are gonna use Python, and basically, as we did the other day, for the technical aspects, we will use the technical analysis in library in Python. And basically, as we did the other day, I will go on the step-by-step code. I'm not going to be here just typing. I prefer spend the time explaining you what is done in the code for you to use it and to get the tool, which is at the end of the day the important thing. Okay, it's not about just having the tool. Is about you understanding that and be able to expand it based on your own needs. Okay, so basically what are we gonna do? I was testing that beforehand, but what are we gonna do? We are gonna define our stock universe. We are not working with cryptocurrencies today. We are gonna be working with stocks. We're going to define our stock universe. We're going to define which kind of things we need to pay attention to. And then once those conditions are matched, the stock will trigger basically. Okay? So in order to do that, what are we going to need? As usual, pandas, since we are going to be working with data frames, datetime, pandas data reader for this particular example, and I will explain you why, but basically is because we are going to retrieve this data from one of the providers that pandas data reader got already built in. We are going to work with OS, since we are going to work with our local system, and we'll need it for later on. I'll show you why. I will put time because I will show you in one particular moment that it is going to be needed. And we are going to import warnings and basically to ignore them, because sometimes when we are working with technical analysis libraries, it raises some kind of warnings based on the way they handle the data frames, but nothing major, okay? Nothing to worry about. So once we run this cell, we got our libraries with us, ready to go, okay? While this is loading, I will show you a couple more things. And it's data gathering. What data are we gonna work with today? Which is gonna be our stock universe, okay? So our stock universe for this particular example is gonna be provided by a CSV file where we got the list of tickers, okay? CSV, by the way, for those who've been following the poll on the algorithmic trading group, is the format that people have been using the most, okay? So I was expecting to be used, but not to be the most common use in that group, to be honest with you guys, but it's fine. So by running this cell, we access to the S&P 500 stocks. For you to know, guys, this would work exactly the same with any Python list that you use, because at the end of the day, what we are going to do is a loop through all these stocks, okay? This data as well can be fetched dynamically. For example, there are many places where you will see that they update the S&P 500 stock, because as you know, they are not always the same, okay? So once we run this cell, we got our list of tickers, including the S&P 500, which is called by this particular ticker in Yahoo Finance, which is going to be our data provider. Okay. Then we got the path where we are going to store the data. This will you'll need to modify according to your computer. And then we are going to define the dates since when we want data. Okay, because is our technical screener is based on non-long moving averages and is gonna be focusing on the current scenario. We from the beginning of the year is more than enough, and probably a couple of months beforehand should be enough, but just before beginning of this year. Okay, and it's gonna finish today. Basically, we want the last data they've got for us to bring us. As well, we are going to count the number of times that we hit this API. Okay? Why is that? I'm going to explain you in a second. Okay? As I said, we are going to do a for loop. Basically, our stock is going to be each of those stocks on the stocks file, which is this one, column ticker, which is this one. Okay, so basically this block of code, what it's gonna do is looping through all this stock, doing the same process. And the process, it's basically retrieve the data and get that data stored in our path in a CSV folder, in a CSV format. Okay, this count is important basically because if you filter this, Pandas data reader can bring you data from many different sources, okay, as you can see here, okay. The one we are going to use today, it's Yahoo Daily Reader, and if we go deep into that, if we go deep into this, basically they says that what they are going to do is return a data frame with historical data basically over the range that we define, start to end, and then that's the important thing. Okay, to avoid being penalized by Yahoo Finance servers, pauses can be established. Okay, basically, do not overload the API. Data for this particular case is free, but we don't want to overload the service by asking for 20,000 stocks in one go. Okay, for that particular case that we are going to use, is going to be free and it's going to be quick. Okay. It's not going to be the quickest. For instance, I'm using a database, so to do that, so it's a bit different with SQL, but like that, more than fine to handle this variety of stocks. Around 1,000 stocks is not that bad. If you want to go for bigger stuff, then probably would be good to go for different process in that particular case. Okay, from this to next steps is going to be the same. So once we got that, if we run this cell, what is going to happen is that this is going to start retrieving all this data. Okay, up to 10 stocks. Why is that? Because I did it beforehand. Okay, I got them all downloaded. And basically what you need to do, it's in here to remove this. Okay, I'm going to leave it just like that. Like that, you will have it in GitHub, basically. Okay, the only thing you need to be aware of is the root. Okay, this needs to be adapted on your own one. Then, what do we have now? The other day, do you remember that we need to process the data into a data frame when we were working with live cryptocurrency data? Now, the data comes clean already. This data comes in date, high, low, open, close, volume, and adjust close. This adjust close takes into consideration splits and stuff like that. Since it's already done, we are going to work with adjust close as close. Okay? Okay, we got the data for our stock universe. Now we need to define which things are gonna pick our attention into the screener. Okay? For that, I've done it quite step by step. Okay, you could define, for instance, a huge MACD function what would go through many different things on the MACD. What I've done is divide between MACD up and MACD down. Okay, So uptrend, downtrend, according to MACD, basically. To do that, it's exactly the same we did the other day with cryptocurrency. We import our indicator from TA trend, MACD. Okay, we bring the MACD to work with us. This MACD, if we look into the class, we'll ask for a series of data frame. In this case, it's gonna be our data frame close, and then it works with this slow window, 26 periods, fast window, 12, and the signal one, which is the 9, which is basically the classic MACD. What I said, if you use customize indicator, that's the moment to change it, okay, or customize ranges. And then we are gonna define the logics for the MACD. As we did the other day, probably you will remember, but if not, I will show you quickly in order for the people who wasn't here the other day to see it. When we are gonna define the logics, there are basically two ways to define. What we need to compare is how is the current scenario and how was before, basically, and to see if something has changed. How did we do that the other day? We did it like this. We said that our current candlestick and then our previous candlestick. The previous candlestick was the current -1. Okay, was the one before, basically. Today we are gonna face it in another way, and then you can decide which one do you prefer the most. Okay? And then what are we gonna say? For the MACD up, the crossovers, basically we are gonna say if our MACD previous was smaller than our current MACD, so the previous was smaller, sorry, and the current is bigger, means the MACD is going high. And then, and then we're gonna say if our previous MACD is smaller than the signal and current MACD is greater than the signal, then it's gonna happen something. Okay, so basically what we are gonna do, what we're doing here is MACD by the first block is going high. Second, the signal was higher and now the signal is lower. So we've got a crossover. Okay, and then we are focusing on two things. We are focusing if that crossover is a simple crossover or if that crossover it's below 0. Okay, here you can apply your own logics basically. And this we spread it here. So if the MACD is below 0, basically has crossover below 0, then it's gonna do that. Okay, else it's just a single MACD crossover. Okay, and then all this function, all this condition here is gonna return true. Why? Because it will trigger the stock. Okay, if none of that happens, then this will return false. The next one, MACD, but cross under, it's literally the same, but going the other way around. Basically, the MACD, the previous MACD was higher, now the current MACD is lower, and then it has crossed under the signal line. And then if this signal is crossed above 0, we got a MACD crossing down above 0. If it's wherever below 0, basically, it's gonna be a normal cross down. Okay, in already probably a downtrend. Same with Bollinger. Okay, that's another technical indicator. Same with Bollinger. Bollinger signal, we do exactly the same. And then we're gonna define Bollinger up and Bollinger down. For Bollinger, we got two things. Basically, the stock can basically just cross about the Bollinger band, or can cross in a previous day and stay over the Bollinger band. Basically, the trend continues pushing, basically up. Okay, so this we did like the same. So if we see the Bollinger indicator on technical analysis library on top of the 20 days moving average, the standard deviation high and the low, which are the bands, it brings us two more indicators, which are Bollinger H-band indicator, and basically this, as you can read here, Bollinger channel indicator crossing high band returns 1 if the close is higher than the Bollinger H-band, else returns 0. Means that if this value is 1, means the closing price is higher. Okay, well, not the closing price. Yeah, well, actually, yes, but normally it could be this data frame that we got in here. Okay, this series. And then the same for the lower one. So here we got a 1-0 scenario. So whenever it's 1 means the condition is true, whenever it's 0 means the condition is false, basically. It's kind of the same here. So we can say if our previous indicator was 0 and now is 1, mean that the stock has just crossed over. On the other hand, if it was 1 already in the previous one and on the current one still 1, this crossed before and remains crossed on top of Bollinger bands. Okay, this is useful, for instance, when we are defining strategies with Bollinger bands width or the percentage B percentage, etc. It's good to know that, to know where we are at the minute. Okay, exactly the same with Bollinger down. I'm not gonna go one by one, but it's exactly the same. Okay, so here basically we will notify when it just crossed, and then we will notify if remain crossed down. With the RSI, we do the same with Bollinger. We say if just cross, so if before, for instance, this one is RSI signal up, what we are going to use 70, but we will be able to modify. So we say if before wasn't 70 and now is greater than 70, trigger. And then if it was 70 and remains on top, so basically on this one, what we are going to do is when recovers from the overbought or the oversold. So what we are going to say is just cross or cross up or cross down, basically. We are going to notify those two things. And the same for the RSI. Okay. These ones, I think, will cover the one that probably you will use the most. But if you go to technical analysis library, you will see that you got this stochastic. You will see that you got the stochastics. You will see many of the indicators that they are commonly used, and then you will be able to customize. But basically what I want you to understand here is that you need to import the indicator and second define the logics. Okay? Then we are going to load this huge cell with all the examples for the technical functions of the screener. And I'm going to show you a quick one in terms of price action. Okay, we are going to define when a stock is consolidating, so it got a flat movement, and then when it's breaking this flat movement. Okay, kind of the same. Okay, so what we need to know is compare how was the situation before and how is now. Okay, to do that, we are going to say if, first of all, we need to know when a stock is consolidating. Okay, for that we need to do the same. Give to that function the data frame to handle. And then we are going to say that our default percentage is a 3.5. 3.5 of what? 3.5 is going to be the price between the threshold, between the closing and the highs of this period. In this case, it's gonna be 15 candlesticks, but we could put 20, 10, 2, or 200. Okay, at the end of the day, that's to customize. Okay, you could add it here, you could put here, and then put the length equal 15, and then change the 15 there for the length, etc. Okay, like that, you'll be able to access this. Then, if this condition happens, okay, if the close price is greater than the maximum with the threshold, is gonna return true, otherwise it's gonna return false. And then what we are gonna define basically is once this is breaking out. So for a breakout, basically what we need to do is move everything one back and then check what has changed on the current candlestick. Okay, we're gonna say, okay, on the previous 15 was consolidating, and then on the current one has jumped, basically has crossed the maximum of those previous six, in this case 16, because we're going one back. Okay, and then if that happens, means that it's having a breakout. Okay, finally, once we got all that, we can launch our screener. Okay, and basically this, I've done it once again step by step for you guys to have it spread it, basically to have it spread it. All this could go in one go, basically, because at the end of the day what this is going to do, it gives you all the stocks from this bunch of data which are matching those conditions. Okay, so you could just define these ones, and then by defining that once, what you can do, all of them will come. Thing is, if you want to do certain processes in here, that's the place to do it. Okay, you could do it on the function as well. For instance, you could do a list and append all those symbols to a list, which is going to be transferred to an Excel file. It's going to be sent recurrently or whatever. So you can basically track or monitor the open positions you got, and rather than the S&P 500, you will have the list of your stock, your current stocks open. This is probably something that we are gonna do when we are gonna work on portfolio management. So we will see, for instance, the efficient frontier, all these kind of things, and we will see how to retrieve the data from our broker and how to balance that in order to get that. Okay, so once we run the last part, we can see that this is bringing all the stocks that are in our conditions. And how are those conditions? Okay, basically here you don't need to print again this symbol is breaking out, because you got the printing from the function. Okay, so for instance, on the breakout signal, you don't need to print because it's already, well, actually, yeah, on this one, yeah. But for instance, on the RSI, if we go to the RSI, here is already printing on the RSI. You don't need to print twice. Basically, I don't want to leave this empty, this function empty. Okay, so we will see that, and then we will compare how it's going. Okay, then you can execute that once per day. You can, once you got this, you can deploy it in cloud. You can put it on the Raspberry Pi, whatever. Okay, for instance, I got it here, so there you go. So you can put it there. I mean, that's funny to do. But, and then is when we can check. Okay, so SLB says that it's already in lower Bollinger. So it's taking longer than 2 days in lower Bollinger. Let's see, which one was it? Just to confirm. Here we go. Oh, sorry. It went to the other screen. So we say SYY. Let's see, SYY. And then let's see what's going on in here. So it's already in lower Bollinger. So if we load Bollinger bands here, let me see how is it. If we load Bollinger bands in here, we see that it's been longer than 1 day in Bollinger bands. And then SEE just went down today. So if we go to SEE, just went today to Bollinger bands. So before was higher, now is lower. Okay, and then like this, all of them. So let's see, for instance, any high Bollinger. So EFX, oh, sorry, EFX, So it just went up on Bollinger today. Okay, so all these kind of things, this is working. We can check, for instance, the RSI, MACD, QCOM, MACD down above 0. So QCOM, MACD just crossed down, basically above 0. So let's come here, MACD strategy, no, little things, MACD. So MACD just crossed down. Yesterday wasn't, today's crossed. Okay, so like that we got all the technical screener that we want. Like that you can quickly monitor that. Okay, let's see, for instance, this one. So IX is breaking out. Let's go for IX. IX is breaking out. Yeah, so probably this has been 15 days with the closings quite close, actually. And then today is breaking the previous high. Let's see any other. PFE. So kind of the same. The threshold probably could be adapted a bit more. But yeah, at the end of the day, that's what it's triggering. Let's see, MDLZ. So they are all stocks that they are crossing about the range that they've been defining. Okay, as you know, this breakout, the percentage can be changed, as you've seen here. And basically, well, I hope you guys liked it. Probably next one we'll be able to introduce some fundamental stuff as well in order to do it more complex. If you are using a web app or if you are using any other kind of visualization, that's quite useful. That's what I actually use with in a web app, not with those particular indicators, but it's pretty much the same kind of systems. Okay, well, hope you like it. In case you got any doubt, leave a comment. And well, that's all from my side for this particular example. I didn't want it to be quite long because it can be tough. But at the end of the day, the libraries, the data collection, logics with technical indicators, and execute these orders, these functions, basically. Okay, you can put it all in one go, but I did it like that to have it split it. Okay, hope you like it, and I'll see you on the next one. See you guys.